For many customers, their credit journey often starts here. But without the right data, there could be thousands of missed opportunities every single day. This means many lenders could be left behind. But it doesn't have to be this way. Lenders can transform their predictive power by starting their journey towards open banking. A journey that allows lenders to increase their pre-approvals confidence and reclaim those missed opportunities with underserved customers. Open banking allows lenders to create a seamless customer journey that shares key insights at just the right time, helping lenders make instant decisions for offers and pre-approvals. Every day, more and more lenders unlock the power of open banking with Equifax, helping them to increase automation, decision accuracy, and provide more competitive pricing. Lend to more people more confidently with fairer outcomes for your customers. Open banking from Equifax. Contact us to book a demo by visiting equifax.co.uk/open banking.
Hello and welcome to this Open Banking Expo live panel debate in association with Equifax. I'm Ellie Duncan, Head of Content here at Open Banking Expo and your moderator for today. I'm joined by an esteemed panel of experts, all of whom are here to answer one key question. Is broker integration the next big opportunity in open banking? Well, as you saw in that intro video there from Equifax, there are a number of stats that suggest this is a good time to be having this discussion. Approximately 80% of applications for credit start with a broker or intermediary. So use of open banking in the broker journey is vital as adoption grows, of course. Now, lenders who feature on their panels are certainly likely to miss out on some opportunities if they're not ready to use open banking insights. In other words, an open banking journey needs to offer value for clients. Our panel are going to be discussing what that journey looks like. They'll be talking about data capture and also consumer duty. Plus, we'll have time to answer plenty of questions from you, the audience. So do send those in throughout the discussion and make them as easy or as challenging as you like. The panel are ready. And with that, I'll introduce our panelists now. I'm joined by Emma Steely, CEO of AccountScore, which is an Equifax company. Also joining us today is Luke Enoch, CEO of Oakbrook Finance, and Matt Fenby-Taylor, Chief Product Officer at ClearScore. So before I pose a sort of initial question to the panel, just wanted to flag that we're running a few polls today, and there's three great questions. Do take your time now, if you can, to answer those, or in the next couple of minutes. We'll come on towards the end of this panel debate to go through the results, perhaps pick out any that really stand out to our panelists, and we can dissect those in a bit more detail. But the three questions we're asking are: do you believe open banking could provide improvements in the intermediary market? Will lenders not using open banking as part of their broker journey be at a disadvantage in the future as more lenders adapt to using this new data source? And then our final question for you to answer is: do you think open banking will be an essential part of lending decisions in the next 5 years? So do make those votes now. But look, let's start with a bit of background, and I'm going to come to Luke first on this. As I said in my intro there, around 80% of applicants or applications rather for credit start with a broker or intermediary. So perhaps you can kick us off by explaining that broker journey from a kind of consumer's perspective, I suppose.
Yeah, good morning, everyone. So probably worth starting answering that question with a reflection on the old journey, and then in the context of open banking, how it would look for a consumer going forward. And so let's start with the old journey, which is where a consumer starting in a broker journey would fill in a range of questions, having selected what it is that they're looking for, whether it be a credit card or a loan, and are then presented with a range of offers. And those offers will state the loan size, the APR, the likelihood of being accepted, right through to a variation of that. And I think the thing that customers are most seeking is simplification and certainty of offer. Right. So naturally, within the panels, they tend to rank the returns from each of the lenders by the things that customers value the most, which are, are they most likely to get the offer? What is the APR that they will pay? And what are the terms of either the credit card or the loan that they're seeking? And then having clicked on one of those offers, they would absolutely expect then to see that follow through as they leave the broker journey and go into the lender. They would expect then it to be a relatively seamless journey through to actually getting what it is that they've been offered. Now, if you think about the old journey, and in that context, this is where open banking isn't being collected by the broker. So this is down to lenders' choice as to whether they offer open banking or not. A customer would be presented perhaps with a pre-approved offer, but a pre-approved offer would then, if they went through to the lender's side, inevitably can't include an open banking journey because the lender is guaranteeing the offer. And once you see open banking data, there may be a whole host of reasons why you would then decline the customer. So it doesn't include an open banking journey. Or if the customer selects on a percentage chance, they may then go through and find themselves having to go through quite an extensive open banking journey then, right? So it kind of conflicts with what the consumer is expecting. They expect to see the terms that they would like to select, and that they're going to get those things. So there's an obvious barrier that open banking presents the journey from a consumer's perspective, right? So then if you forward that into the new world where open banking has already been consented to by the consumer way in advance of when they're searching. In this scenario, a customer would go through and request, what it is that they're looking for. And for those that are technology enabled, would be able to provide back their answer, having consumed that open banking data. The customer will be presented with their offer, and when they click on it, they won't have to go through an open banking journey with the lender. It would have already been done and taken care of as part of that short window in which the lender has to return an answer. And that is a far slicker process and fundamentally the game changer from a consumer's perspective around still giving those guaranteed offers and the simplification that they want, whilst also making sure that all the kind of checks that you'd want and the benefits of the open banking data and the richness of that open banking data has been taken into consideration.
Mm-hmm. Great, thanks, Luke. I think that paints a really good picture, and so just picking up on something you mentioned there about the kind of consented journey. Emma, can you provide a bit more detail on that kind of customer consent process, please?
Yeah, absolutely. Now, we're all really clear that with open banking, it requires the customer's explicit consent. And so, when it's now hosted at the broker side, that enables that consumer to have already shared their data with the broker to already have that information. And then there is one additional point here, which is a GDPR point as opposed to an account information services point. And that is that the consumer is then consenting to have their data onwardly shared with their panel of lenders to find the most appropriate lending product for them. So I think that is what is the key here as well. And then the fact that it is so slick from the lender side, with the broker being able to just pass over the token to the lending panel, and the lender being able to get that formulaic standardized data that they're used to seeing when they've got their direct to consumer journeys happening as well. So it's all led and controlled by the consumer, but it enables them to get the offers in a very, very slick way.
Mhm. Yeah, thanks, Emma. And Matt, let's bring you in at this point. We've heard there about kind of what that journey looks like from the consumer side, but of course there's a kind of lender's view and the broker's view there. Can you paint a bit of a picture about how that reduction in friction helps kind of the other parties, if you like, in this journey?
Yeah, absolutely. So for us as that sort of intermediary, we're trying to do two things. First thing is get that consent and that open banking connection um, out of the same session, the same journey as the consumers shop for or look for a credit product. So if we can do that a day, a week, a month before the consumer is actually looking for that credit product, we take the friction not just out of the application journey, but as Luke said, we can add that certainty, and the whole of that sort of broker shop experience is improved. And so what we do is we present a number of different value propositions, and we've seen that there is a lot of openness to giving open banking data and consenting that data in the right way if there's a clear value exchange and the user gets it. And so, for instance, with ClearScore, we basically go down two routes. One of them about increase the certainty. You will see more offers, you will see better offers if you provide open banking data. And then secondarily, we offer a what we call affordability score, which is showing you how lenders may interpret that open banking data and giving you the sort of foresight on what that might do to your eligibility. And so by combining those two things, we get the open banking consents and the data way ahead of the consumer actually going to a panel of offers and choosing what they want and clicking through. Once a consumer does sort of get to the panel, increasing confidence for us, triple lock is how we really show that confidence in our panel with guaranteed rate, guaranteed line, guaranteed pre-approval. The next step for us is really to hand that over to the lender in whatever process they want. So sometimes we'll be handing the raw open banking statements over. Other times it will be categorized data. Other times it will be the token as was described, and that then passes all that through. I think the key thing as well for us is that makes the journey, particularly the application journey on the lender side, less frictionful. It takes that additional open banking connection step out, and there's an increase in pre-fill that can be done as well. And so it allows the consumer to focus on the important question that they need to answer, which is what's the right credit product for me, rather than hunting around for bank statements to prove affordability, or going through another or a different open banking connection journey.
Okay, great. Thanks very much, Matt. And that kind of idea of a seamless journey and frictionless journey is coming to the fore here. So let's dig down a bit into that kind of data capture part of this journey. And Emma, I'm going to come to you first. How is the data captured by brokers used to improve the consumer journey at the moment? And then where do you perhaps see that there's an opportunity for brokers to make better use of this data from now on?
Yeah, absolutely. Now, I think what's really clear from what Matt has just said is, the brokers truly are the facilitators here to enable us to, unlock the door for the consumers to be engaging. And I think at the moment we are at the stage where we've now got there's enough lenders using open banking to be able to pass the data in whatever form the lender actually requires. But I think we still have that process in place at the moment, and it's not just on the broker side; it's on the lenders on their direct to customer sites as well, where there is still a lot of application form fields that are filled out. So I think the next stage of evolution, to be honest, is about how we could actually reduce the number of fields that you're requiring a consumer to actually complete, because what the open banking journey enables, the further up the chain it goes, is really that production of the verified information coming straight from the bank, from the open banking APIs, as opposed to the customer filling out those fields themselves. So I think that for me is something that really looking forward to getting into, and we're already starting to see that those elements, as Matt touched on some pre-population, but actually how much further can we take it with that data that we're getting from open banking.
Yeah, Matt, I'll be keen to hear if you have anything to add there about perhaps some of the opportunities you've spotted and where you can make kind of more and better use of this open banking data.
Yeah, I think we're at the early stages here, and I think there's a lot more that can be done. I think that broadly breaks into two areas. One is that the categorization and the sort of insights which you can glean from that categorization is still relatively early doors, and that will improve over time. And I think the connection of those insights, whether that be sort of like a particular feature of the categorization or a metric about it or whatever it might be. And so, for instance, ClearScore combines a bunch of insights into an affordability score, gives you a way of connecting the increasing confidence that Luke was talking about earlier with an earlier proposition for the consumer. And I think that bringing those two things together and connecting that sort of that value to the user, value for the user before they apply for credit, to the actual credit application itself and the sort of broker shop experience itself, gives like a really nice, strong combined proposition. But as lenders increase their sophistication of decisioning based upon open banking data, we need to keep improving that approach and that process of helping users understand what that means for you in the context of credit. But I think there's a lot more to go, not just in terms of the accuracy and the quality of that categorization, hence the sort of insights which you can glean. But I think that as we learn more about what we see in the open banking data that can help users make better decisions about their credit, then there's going to be more value that we can give to the user outside of a credit application journey, which will increase the likelihood of them giving open banking authorizations, increase the likelihood of them reauthorizing after 90 days, or giving the soft sort of reapproval that we'll be seeing later this year, fingers crossed. And in turn, that sort of ongoing longevity of open banking connection will not just make the sort of one-time broker experience better, but we can then continue passing that to lenders when it is properly consented, so that they can have that ongoing view as well and be able to do the different decisions and that sort of customer management, which opportunities about line decisions or ongoing affordability or whatever it might be.
Mm-hmm. Thanks, Matt and Luke. This seems like a good point to bring you in at, being a lender. Obviously, Matt alluded there to the kind of data that is then passed on to the lender. But also, I think Emma and Matt have both painted this picture that we are still in the early stages of this kind of open banking data journey, aren't we? So, Luke, fill us in on kind of the data capture from a lender's perspective.
Yeah, so I guess I think about this in a number of ways. So holistically, my big thing is the more customers know and understand and are familiar with the concept of open banking, which, by the way, as a consumer-facing language is not great, right? Customers still don't really understand what you mean by open banking. But actually, when you actually go in to talk to them about this is about you owning your bank data and you having control over sharing that data, customers are far more willing to engage. But there's an overarching theme for me, which is around understanding awareness. And it reminds me a little bit of contactless. When contactless first came out, people had no idea what it was, were very scared of contactless, and eventually over time that is eased. And now actually, if there isn't a contactless payment terminal, you'd look at it a bit strange, right? If you were asked to actually stick your card into a machine, that's the unusual way of thinking about it now, right? And I think open banking is a bit like that. And then under there are a number of key elements. And typically when we talk about open banking, we tend to steer towards new customers and underwriting, which I understand why, but it's much broader than that. So maybe if I start with the data capture for new customers and then elaborate a little bit more. So for new customers, open banking data, I've heard before people talking about wanting to capture just income or just elements of bank data, which to me is a relatively strange way of thinking about it. If you think about new customers, when you're making lending decisions, it's always based on the ability for the customer to repay sustainably and the willingness of the customer to repay. And there's an awful lot of science that goes into the willingness, which is typically all the mathematics and the underwriting and the scorecards that sit alongside that. And then there's the affordability assessment, which is equally as complicated, but tends to use unsophisticated data, which is now being transformed by open banking. So those two things tend to run orthogonal, and you only want to lend where you believe the willingness is there and the ability is there. And open banking data provides a rich source of data on both axes, right? And therefore you'd want to capture all of that open banking data. Now, if you've worked in a major bank, I'm sure anyone listening will absolutely resonate, because pretty much every scorecard is split down the middle of, is this a customer that's already known to the bank, i.e. has a current account, or is this a customer that's completely new to the bank? And the power of those scorecards are quite different, right? So that's kind of the new business. And then if you extend that further, there are two other key points I would add, which is one, if customers, and as customers inevitably will get more used to owning their own bank data and providing consent, there is a opportunity for us to do much more, and I'm sure most lenders want to do this but haven't had the means to do it, which is provide more helpful behavioral nudges or information to customers as they manage their credit. And it's an empirical fact that customers tend not to start to miss on a lender. If you are actually to look at your DCM blocks or whatever you use to manage existing customers, it's a fact that a customer, when they start to miss, they miss all their lenders, right? And being able to provide information about how customers, the health of their finances, the health of what they can and can't afford, I think would be a great step forward for the industry as a whole. And then there's also the forbearance side. So when customers tend to have financial challenges, if a bump in the road comes in the future, a lot of customers will sit on a phone for half an hour, going through a very long, drawn out income and expenditure process. Actually, open banking can massively streamline that. So there's a commercial benefit for organizations, but equally it allows customers to feel far more in control of their information and what they're providing, and find the right personalized, tailored solutions for them. Inevitably, some kind of conversation may need to be had for the most vulnerable of customers who need some verbal support, but a big chunk of customers would much prefer that type of process. So I understand the onus is very much in these types of conversations around new customers, but this has got a lot of mileage across the whole customer journey. And overarching for me is this culture of getting used to the language of open banking and really pushing this narrative about consumers now owning their own data, and it's all in their control.
Mm-hmm. Yeah, I think that's,
if I could
that's really...
follow up.
Yeah, of course.
Yeah, if I follow on, thank you. I think a couple of really interesting things that Luke said there. That point about open banking language, I absolutely agree with. The consumer doesn't think or really care about the technology or open banking or whether it was screen scraping or whatever it might be. They want to have a base level of confidence that it's secure, it's trustworthy, that it's safe. But beyond that, it's about what is the proposition? What is the value you're giving them in exchange for them doing this thing? And I think if you look at all of the different areas of financial services where open banking is trailblazing. So if you think about a chip or a money box in that sort of like round up savings space, or how we're doing it at ClearScore as a credit broker intermediary. We don't really mention open banking other than at that one point and in the T's and C's, and just making it clear that this is the pipeline, you can trust it. It's a thing that's okay. And if you get that right from a UX point of view, there's very high conversion as long as people understand what it is when you put it at the right time in the right place, whether that be at onboarding or as you're bringing them into a new feature or whatever it might be. And I think that advantage of doing that outside the application journey is all part of that. But I think also Luke's point about the future value here, and that point that open banking is, it's not quite a leading indicator, but I guess it's a leading indicator compared to some of the more traditional bureau data. But it's close to real-time indicator compared to a 2-3 month indicator of a very different set of data. And that allows what he's talking about there of, as we get more sophisticated, as we understand a bit more, and we start to come up with product solutions which help people make better decisions about not just how to take credit or whether to take credit, but then how to manage that credit through the entire credit life cycle. Open banking is a much richer, much more interesting, much more real-time data set to provide great solutions on the back of that.
Mm-hmm. Yeah, and just sticking with you actually, Matt, and I think in that opening video we did see a stat about the fact that brokers are increasingly adopting open banking, but for those that kind of haven't yet, what is the kind of incentive, I suppose, that's needed there? What's going to drive them to adopting that kind of open banking data, do you think?
I think Luke touched on it right at the start, which is that consumers want that increase in confidence, in certainty, and we're now getting to the stage where it's that is getting all the way down to actually improved rates or access to credit when you wouldn't have had access to credit in the past. So we are using open banking, for instance, to allow people who get no results on our panel to add open banking, and some of the time that then with the lenders who are integrated with us to offer credit, because they are seeing something which gives them that confidence now to be able to make an offer. And so what we will see, I think, is that frankly, those lenders are just going to get left behind. They are not going to have as much click share because they will be a percentage approval chance rather than pre-approved, or it won't be a guaranteed APR. It will be representative, or it won't be a guaranteed line. It will be whatever it might be. And actually, next week, ClearScore is launching something new called ClearSaver, which is going to be about really presenting reduced price offers to users in exchange for that open banking data. And that is, again, that is going to be differentiated. And for those lenders who are not consuming open banking, they're going to be lower down on a fairly ranked panel, and they're going to get less share of voice.
Mm-hmm. Great to hear about a launch coming from you guys next week. Obviously, we'll keep all our audience and readers posted on that. But great to hear, Matt, and thank you for answering that question. Something you obviously mentioned there is, the fact that open banking data can be used to help those perhaps that don't have a kind of a credit history, and that is something that I want to come on to talk more about, which is that kind of consumer duty, I suppose. It's obviously a really, really key issue. It's something that there is now more awareness of among lenders. I think that's fair to say, about that duty that they have to consumers, and obviously it's an issue that is extremely topical, given that we're living in the middle of a cost of living crisis. So where does open banking come into to all of this then? Luke, obviously, you can talk a bit more about this, but just touching on that idea of transparency and just, I suppose, it brings in financial inclusion as well, doesn't it?
Yeah, it does, and I think there's been lots of probably in 20 years that I've been working in financial services, lots of rhetoric around how you might go about doing and making offers to customers who haven't got a credit reference agency record, and so I think it's been a well discussed topic. Open banking absolutely is one of the ways in which you might solve that, but I think there's a broader conversation around transparency with customers. And certainly as you think about consumer duty and customer outcomes, and I'm still reflect on face-to-face conversations I've had with customers, where if you actually ask a customer, do they think that your lender did an affordability check with you, and the response to that question is inevitably, I don't actually know, because with technology these days, the speed is everything, and the amount of computation power in decision engines to be able to gather vast amounts of data on a customer, make sense of that, run your algorithms, and return an answer. That's all done in seconds, and for the average person, that seems unthinkable, and often customers would be none the wiser as to what decisions you've made, why you've made them, and whether you've actually completed the full range of assessments that you would expect to make. And so it's always stayed with me, this fact that customers aren't familiar with what we actually do behind the scenes. And so replaying that back to customers, I think is an important part of opening up the transparency and starting an engagement with the customer around what they can and can't afford, and whether that be an accept or a decline, right? So slightly different in a broker journey. You can't really tell customers why you haven't had an offer, but certainly on your direct journey, there is no reasons why you shouldn't be able to play back the reasons why you would decline, and particularly on affordability, why a customer couldn't afford it. I think that there's a broader good for the industry in trying to actually have an engagement with the customer to explain that. So certainly at Oakbrook, one of the things that we are doing at the moment is providing a full affordability assessment playback. And we've started that journey this year, and some really interesting reads from customers who, some of the verbatim comments are, really, really helpful to see my finances laid out this way. We take for granted that customers may have that fully understood, where actually we can add a lot of value by providing that structure and that logic to what they can and can't afford. Mm-hmm. And then also language. One of the other important findings that we found this year was how you ask questions is really important. So Matt talked about the language of open banking, but very simply, we did a survey earlier in the year around understanding the income and affordability or expenditure questions. And when we asked customers if they understood what net income meant, 90% said they were super confident or confident they knew what that meant. And then in the next question, you present a range of options as to what it means, and only 50% got it right. And so, the language that we use and customers' understanding of what we think is colloquial but obvious language is not always the same thing. And so, bringing these things together of transparency of the assessments that you make, open banking has a big role to play in that, and then making it really easy and friendly for customers to understand it, I think is a massive step forward for the industry.
Mm. Yeah, interesting findings there that you point to with that example of net income, and I think Matt, it might be nice to bring you back in at this point, just to kind of get an idea of your thoughts on customer transparency. I suppose from your point of view, it can kind of help to build this holistic view before customers apply for loans, right?
Yeah, absolutely. And I think you've got that sort of baseline of trust and the transparency we need to do, not just legally, but it's the right thing to do to make sure that people really understand what they're consenting to and how their data is going to be used, and all of those different pieces, which is a bit of a challenge in and of itself, just to do it right in sort of plain English in a way that's understood, and works for the user. But as you go beyond that, as you've got the data, you've got it consented, and you can start to see it. I think we've all got different ways in which we can increase that transparency. I love what Luke's talking about in terms of sharing that specific affordability playback to the user. And what we're doing with our affordability score is trying to provide a similar sort of transparent view to the user, just sort of one step higher up the value chain. Our assessment and our sort of insights that we give our users about their open banking data isn't based on just one lender. It's based on sort of like overall how are we seeing lenders making decisions based upon this data, and what you can do about it, what the red flags might be, what does good look like, how do you sort of stack up against the overall, for instance. And by providing that transparency, we hope that we can, and we're starting to see some interesting results in terms of engagement with that, and then through to, as Luke says, that sort of customer duty of care, helping people actually make better decisions and manage their credit in a better way, which helps everybody. Obviously it's helping the user, but if people manage their credit lines better, and non-payment rates go down, and all the benefits that sort of come from better use of credit, it drives the whole cycle. And Emma and what people like Account Score are doing in terms of that categorization and creating those insights, what ClearScore and intermediaries and brokers can do in terms of sitting at that particular point of the value chain, and then what lenders can do, as Luke described. I think all of those things build towards more transparency, but not just the transparency, but the help and the guidance as to what to do based on that transparency is all in not just our users, our customers' best interests, but it's in our interest as an industry as well.
Mm-hmm. Yeah, and Emma, I'd like to on that point that Matt made there, that bring you in, and I guess that point that Matt made about there's sometimes being that perception that it's all about transparency for the consumer and the customer, which is great, of course, but obviously this access to a kind of wider data set does help lenders to become equally more informed, doesn't it? So can you explain kind of why that is so important?
Yeah, absolutely. And, really sort of carrying on the theme from what Luke and Matt have said, when it comes to actually a lender seeing that data for the first time, when a lender first sees a bunch of raw transaction data, it can be really challenging to use. And I know that from sort of lending with this data sort of like my pre-account score life, and figuring out how to use the data. And so really what it comes down to is being able to understand, the income and the expenditure of that customer, and understanding about how to calculate understand the essential spend versus discretionary spend, and calculate the consumer's affordability off the back of that. And there's a lot more credits coming into consumers' accounts as well, as opposed to just, salary. And it's about understanding what is the earned income versus those other credits that come into the account. And so, with the combination of the key being the sort of like core categorization of the data when lending decisions are being made, but being able to provide those additional insights, such as seeing, if somebody has got a new job, if you're seeing any sort of missed payments and areas like that, to provide that information back to the lenders. And I think a lot of the time, I have conversations with the lenders and they say, well, I'm going to say no to more people. And I absolutely dispute that. What you will do is you will make better lending decisions, and you don't necessarily as a lender have to change your risk appetite when you're taking open banking data. What it shows you is just because somebody may be thin file on the bureau, you are still able to lend within your risk appetite with this additional data set. And I think that's the fundamental understanding that the lenders are now starting to see. And as we move into, with consumer duty, is about making these informed decisions, and that playback to the customer really helps to just expand that sort of open banking economy, with the consumer really starting to understand, okay, right, I am viewed in this way because of this spending behavior. Here are the things that I can do to improve. And it goes to that sort of financial education, those coaching hints, tips, and nudges that people like ClearScore, organisations like ClearScore, can provide back to the consumer. And then you just see that it really starts to work well, extremely well together.
Yeah, great, Emma. Thank you so much. And I want to come on to a question. I mean, we've been talking about open banking all the way through this debate, of course, but there is a bit of a narrative that kind of emerges every now and again that open banking has been something of a flop, that it hasn't been the great success, in the UK that many had hoped. And I'm just wondering, and I'd like to hear from kind of all three of you on this. Let's start with you, though, Luke, first. Do you think that's an accurate assessment?
I think it's way too early to conclude, and it depends on what yardstick you're measuring success by. By far the biggest obstacle was actually getting the big CMA9 to actually provide the technology solutions to make that a technology-led way in which that data can be released. But if anyone thought that that was then going to open the floodgates, it probably lacks a little bit of understanding about the value chain and all the stakeholders in that process. And so, yes, one obstacle has been solved by the AISP solutions, but the next biggest blocker that is being removed right now is how that's integrated into the customer journeys, right? And ClearScore absolutely are a trailblazer in how they're doing that, which is not only are they creating a value exchange with customers pre the application journey, but they're also making that data available on customer consent through to the lender in a seamless way. And that is by far the biggest kind of breakthrough in open banking being used within mainstream lending. But that's only happened in the last 6 months, and so I would expect that by the end of this year, probably something like one in 5 applications that I see will have this seamless open banking journey, which the consumer will see exactly how they've seen it with the guaranteed offers, guaranteed rates, everything else, but the open banking data has been consumed and used in the decision making, right? So I think it'll be roughly 1 in 5 by the year end, and if others follow a similar approach to ClearScore, you could see that being 1 in 2 by the end of next year. And if you get into that stage, actually, that's about as good as the banks have ever had it in the last 40 years. So roughly 1 in 2 applications coming into a bank will be an unknown customer, and the other would be a known customer. So actually, suddenly you think about what the original thesis was, which is around unblocking competition in the UK market. There's every opportunity over the next 18 to 24 months where you'll suddenly see open banking become a mainstream capability. Now, the only difference between perhaps what Oakbrook will see, and I'm I'm hopeful that it'll be 1 in 2 versus across the industry will be where you are in your journey on investing into open banking strategies, and the technology that you need as a lender to be able to do that. And some are further forward and some are further behind. But there will be an opportunity for every lender in due course to be able to get a huge amount of open banking data as mainstream lending journeys, which today is a bit more niche. Right. So look, I mean, kudos to ClearScore, because they have set the tone for how I think it should be done. And if we can encourage others to adopt a similar standard, then that will be the biggest breakthrough. And I think we'll all be sat here in a number of years' time saying it hasn't been a flop at all. It's actually been a roaring success.
Mm-hmm. Well, yeah, as you say, Luke, time will tell. I know I'm keen to get your views, Emma and Matt, but we also have a number of audience questions that have come in. So perhaps when I come to you with one of those questions, you can also incorporate your answers to my previous question about sort of the success or not of open banking, because I think it's a really important one. As I say, we've had quite a few audience questions, and one of which is sort of around consent and privacy wording, Emma. So I'll come to you on this, something you touched on earlier in our discussion. They've asked, how is the consent/privacy wording managing for the fact that data could be consumed by one on a panel as opposed to the end user explicitly called out to the customer?
Yeah, and it's actually quite a simple process. So when the broker is the one who is going through and accessing those open APIs, whether they're doing it via a technical service provider or a third-party provider, it needs to be clear at that point on the explicit consent that you are sharing your data as a consumer with that broker. And that is the purpose for accessing, and there'll be clear reasons for access. And those reasons for access would be explicit in and around understanding affordability, to help find you the right credit solution, those kind of reasons. And so they are kind of tailor-made for each, depending upon the circumstances. But yeah, as I touched upon earlier, the onward pass of that data is a GDPR point. And that is for where the broker or intermediary is required to say, we are, in order to find you the right solution, we need to pass your data on to our panel of lenders. Please consent to do so. So there is another consent point that is required on the broker side in order to be able to pass that on to the panel of lenders. And then what we actually have is within the privacy policy area of that, to be belt and braces, is the list of the lenders that can potentially get passed on to. So that is the roundabout way of doing it. Just to touch on if I believe open banking has been a flop, surprisingly, of course, I don't think that. My business was acquired by Equifax last year. But what I do think is the adoption is changing. The thought process around open banking is changing. Initially where people were like, oh, it's all about sort of personal finance managers, that kind of has moved away now. It's really about that what value is being given to the consumer. And Matt and Luke have both spoken about that value exchange to the consumer. So there has to be a purpose for me to share my data. It can't just be to tell me that I went to McDonald's. So it's got to have the affordability elements, the potential, how it can reflect with my credit score, and how I have more opportunities to access credit, and then through that entire life cycle, working with the credit organisations. And I think that for me is where I have always sat on the open banking space. And it has to be, you have to be able to commercialise it. If there is no return on investment for the brokers and for the lenders and for the banks, then that's when it takes away the ability for it to really work. So lenders such as Luke clearly see return on investment, which is why there is that they move it more and more forwards in the journey because it's beneficial to them as an organisation.
Great, thank you, Emma. Tackled two questions in one there, which is brilliant. We've had another question. I think I'll ask Matt to answer this one. And again, it kind of will give you a chance, Matt, to talk a bit more about your views on open banking. So the question is, do you think the key to making open banking more mainstream is standardization of categorizations across all AISPs? That was a mouthful, but Matt, go for it.
Thank you. Good question as well, I think. Just to answer the first one, because really about the flop, I'd build on what Emma said, and I agree with everything that she said. I think the first thing is, if you look more broadly outside of credit, I think that we are clearly seeing the sort of saving roundup applications finding really strong product market fit, and it's a clear success for exactly what open banking was set out to do, which is create new products and new ecosystems and new competition in a way that just wouldn't have been possible otherwise. And they are doing that. If you look within credit, I think Emma was spot on. I'd just add a couple of small pieces, which is, I think particularly for us, we need to see some aging in the data to be able to make the right decisions and to use it in the best way, and that takes time. There's just no way around that. I think the second thing is it takes us getting to a critical mass, and again, you'll see that slow ramp, and then you'll hit an inflection point, and the growth will be there. And so no, I don't think it's been a flop. I think if you look at the sort of entrepreneurial market forces, I think we could call personal finance management as being a bit of a miss. I think we could call sort of like the roundup things as being as being a bit of a hit. I think we can call open banking in credit decisioning, both through the broker and direct, as being a hit / about to be really proven out as being a hit. So I don't think it's been a flop at all, and I think it's just going to go from strength to strength, and particularly as PISP starts to get more adoption, I think that's going to unleash a whole new wave of exciting innovation. The hard thing is what Emma said: how do you find that value? And if that was easy, everybody would have a great company and a great product, which would grow like mad. It's not easy, and this stuff takes time. And it's great to have seen that sort of effort to get open banking to enable these whole new sectors, these whole new businesses to be created. To the specific question, which I've probably forgotten now because I've been rabbiting on a bit, do I think categorization needs to become mainstream? I don't think it has to, but I think it probably will, because I don't think that the precision rather than the recall, I think, is going to be increasingly important. And I think that as we get to sort of point of diminishing returns on that precision of the categorization, all of the sort of advantage to the lender is as both Luke and Emma have described. How do we integrate that into our scorecards? What are the decisions that we make? How do we make smarter lending decisions about our unique risk profile and the customers that we want to acquire and our strategy and all those sorts of things? And so the value of a particular unique categorization engine, I don't think is going to be a big standout. And generally, I think when you see that sort of situation, you'll see a level of standardization come in the market. I think we'll see a small number of categorization engines being predominantly used in the marketplace.
Great, thank you for taking on those questions. I've got another one from the audience that's come in. It will require some fairly succinct answers. I'm going to come to Emma and possibly Luke on this one as well. But if I can ask you to keep your answers fairly short, that would be great. It picks up on that point, Matt, you made about scorecards. The question is, given Luke's comment on scorecards being different for a bank's existing versus new customers, is an open banking driven scorecard the same as an existing bank customer scorecard? Or is the task of developing open banking scorecards much more challenging? Emma, do you want to tackle this first?
Yeah, I absolutely think it's challenging. Actually, coming from a lending business that pre-open banking that was using the data back in 2011, it took us 3 years to write a profitable line of credit using the data that we got out of the provider at the time, and that's because it is a complex piece to understand. But there's always going to be complexity in and around developing the open banking scorecards. And what we've been able to do at Equifax is actually work through and understand, because we have the beauty of the credit bureau data there as well, and really be able to understand that data in depth and provide those scorecards as well to the clients. So yes, I do believe it is challenging, but by working in partnership with the lenders, that gets them a long way there more quickly, certainly with the use of things like the synthetic data packs, because you cannot retro open banking data. So it is a process of going through the collection of that data as well, or working with a provider to work on with the synthetic data pack, so you can really understand that data ahead of launching the product.
Mm-hmm. Thanks, Emma. Luke, anything to add fairly quickly, and then we'll come to some of the poll results, I think.
Yeah, the only thing I'd say is Emma made the point about the retro. So that's one of the disadvantages of not being a bank. You don't have that long-standing history, and so you have to build it. But the big advantage is if you were to think about how many people across financial services were working on categorization 6-7 years ago, it would be a handful as a side of the desk type job. And the ability to get that data and make it exposed to a decision-making engine was incredibly difficult. Since the invention of open banking, you've got companies who, the vast majority of people in those companies are working on building categorization engines, right? And so actually that's moved forward massively. And the ability to then access that data and put it into a decision engine has moved forward massively. And so pros and cons, and so there are some challenges, but I would say in the main, it's become infinitely easier to get a hold of the data and make sense of the data.
Great, and on that note, let's come to some of these poll results then. So we asked the audience, do you think open banking will be an essential part of lending decisions in the next 5 years? Only 2% said no, not more so than today. 29% voted yes in niche situations, and the majority, 69%, said yes, an essential part for most or all decisions. Perhaps not surprising then that the other question we asked, so that was, do you believe open banking could provide improvements in the intermediary market? 98% said yes. I mean, those are pretty resounding results. And I guess, Emma, quickly, any surprises there, would you say?
No, absolutely not. I think that we've seen that the adoption is coming. I believe the inflection point has already happened now. With open banking, with providers such as ClearScore really adopting it at the front end. So and I think we all are pretty much agreed that more data equals the ability for smarter decisioning, and to give the consumers that transparency on the data. So it's just really about how we stitch it together and then scaling on from there as a open banking economy.
Great. And of course, we did ask a third question. I don't want to miss that one out. Will lenders not using open banking as part of their broker journey be at a disadvantage in the future as more lenders adapt to using this new data source? Perhaps again, unsurprisingly, 88% said yes, 12% said no. So there is, I think, a sense there of where the market is headed. I think it's fair to say, right, Matt, just briefly.
Yeah, I think so. I mean, I think, as Emma said, we've hit the inflection point. I think it's all the indicators are there that this is the direction of travel. I think really what it comes down to is just the decision making, speed of adoption, and implementation on the lender side, which is going to be the primary factor for each lender as to how quickly they get there.
Great. Well, thank you so much to my panel, Emma, Luke and Matt, for joining me today. And of course, to Equifax. Thank you for joining and for sending in all your questions. This panel will be available on demand on openbankingexpo.com. That's all for now. Goodbye.